All right, hey there, guys. Sam here, back with another video. We're going to continue in this series. It's kind of digging into some of our most popular indicators, some of which I think they're underappreciated for what they're delivering, which is ultimately about objective decision making. That's often what we're trying to do with these indicators, and we touched on that yesterday with the market structure indicator. And this is kind of this is the dynamic reversal zones with the SBS swing pattern built into it. I'm going to focus on the dynamic reversal zones because I think that's the easiest to grasp. And it's really doing much of the work for you. Now today I've got a 1 minute on the MNQ. I tend to trade the ES more than the MNQ, but this is the MNQ is the most widely traded futures instrument of all instruments, right? Look at the volume. This is where people are trading. Certainly, this is where prop traders tend to focus. So look in here and see if we can make some headway here. Now, of course, here's our open. It's big down day all day, right? Obviously, right? So we've got a big downtrend. To keep it simple here, I've just got VWAP on here, and then I've got a 21 EMA, which tends to be, some people use 20, some people use 21. It tends to be a real magnet, and it helps define the trend. Now, I like the slope color because it's kind of dummy proof. Like, okay, well, if we're sloping up, okay, make it green. My point here is how what this indicator is doing is it's drawing you retracement locations without you having to do it yourself. Now, could you draw this yourself? Well, yes, you could. Now you can note here the fractal swing structure here that it's creating with these little dots, just to try and make it easier. So yes, you could come down here and you could draw this one over here and say, okay, well, if it comes right, that's kind of what it's doing. But the idea is to make this an objective decision, because every one of these little retracements here, so in this case with a down day, every time we get an upswing here, we're creating a pocket of liquidity. And we know, right, we don't have to wonder. We know this is what the algorithms are looking for. Where can I tap into liquidity to where they can fill at the size they're looking for and then continue in whichever direction the market's going to be heading, right? They're going to push that. We can't do it. We don't move the market. We just try to adapt to what the bigger players are doing. Now, what I want you to note here is that this can be really a simple way to get clarity on where your entry locations can be. So if we see it, so we go straight down off the open. Now, I know we're doing this in hindsight. I'm going to get to the hard right edge, but just let's understand what you're looking at. So once this swing happens here, and I talked about this a little bit yesterday, right? So here's the upswing. Now, in a downtrend, here's the upswing. Now, next thing that happens is I get a new low. So when the market is coming back into this liquidity zone, we have a clear entry template, if you will, in terms of where I can be looking to take advantage of the potential for this liquidity pocket here, as long as, well, here, let me get a straight line here, as long as I don't break that high. So as long as I stay inside of this box, if you will, right, this red box here, I have a legitimate location here from which to be looking for short entries. Now, often you can look at this as entries here. I've got the fibs here. If we look in here, we can turn the fibs on or off, but just to make it easier here. So within this box here, I'm going to get a 50, a 382, and a 618. Now we go much deeper than that. In fact, there's a little buy pattern in here. We get the same kind of thing. We get a retrace here, right? And that's all the market ever does, right? So as we look here, this is a little buy pattern in here, but we've got a downtrend here, and we're well below VWAP. So if you want to take that's for a very aggressive trader here. So you potentially here, you're not trying to trade this box here, this push out of this little breakout. What you're looking for is to try and get short based on the order flow potential that's right here within this upswing. So this is a chance for those that can move the market to mitigate longs that were created here to create this liquidity range here, this upswing here. So as we come back here, this is a chance for those that can move the market to mitigate those longs and then ultimately take it where they want the market to go. So you wouldn't necessarily be looking here and go, oh, okay, well, time to get long here. right? I'm going to take the breakout. Now, would you have had a little scalp there? Yes, but that's not the way you want to look at the application of this particular indicator, these dynamic reversal zones. These are potential pockets. So if you look here, the thing you want to remember is that the target range is just the box itself. So, for example, even though this would be counter trend, when we come back into the range of this little liquidity pocket here, your target is not up here. Your target is the high of that box. So a little scalp here, yeah, it would have been a winner. Yes. Is it worthwhile, right? Is there enough money there, enough juice? Well, if you're a scalper, right, maybe you take a 20 lot. I don't know, you'd probably wouldn't be on the MNQ, but that doesn't make sense because I can look at this and go, okay, from the midpoint to the high, what's there? Okay, well, there's 48 ticks, right? Call it $25. Enough for the risk? Maybe, maybe not. You're going to make that decision yourself. But now as we're coming back down here, as we start to roll here and this trend starts to pick up speed, we don't get another little box here, a little uptrend that's big enough to support the idea of a potential location here. So if I were to just take this and, let's do it this way. I'm just going to our toolbar to grab some things that make this easier, right? So here's the low, right? Here's the high. Now, when I come back into this pocket, right, into this range of liquidity, right, this is an upswing, but this is bearish liquidity inside of this downtrend here. Because, again, it's an opportunity for those that can move the market to mitigate the longs that were driven up here to create this little pocket. So as we come back to it here, look exactly what we do. Remember, your stop is going to be a couple of ticks above that pivot. So when we come back into this here, you've got an objective location from which you can take entry, and you've got, of course, you can always let a runner go when you get in here. But if you're trying to do this mechanically, the first target has to be the low because we have no indication. Of course, it's always easy in hindsight. We don't know that this is going to go much further than that. So if you're selling in this box here, maybe you're using the 618 or the 50 here, or maybe you start at the 50, add at the golden zone. As we come down here, first target has to be the low of the box. That's your first target. Right, here's the range you're after. Now, if you're gonna let it run beyond that, note here that you've got potential. You've got potential pockets of bullish liquidity as we come down into that here. Now you see you get a little pocket, but finally we break this low. So downtrend continues because we're continuing to break lows on the bull side. So this right here, let's do the math on this. As you're in here, you're risking, let's use the 50 up here. So you're risking 81 ticks, call it $41, $42 to try and make here about the same, right? And again, it's depending on did you enter at the 50 or the 618. Usually, right, it's a good idea to if you're going to do this with multiple contracts, which would be ideally suited for this rather than one lots. You would maybe enter first position at the 50, second position at the 618. If you particularly like what you see here, could add a third, or again increments of 2, 4, 5, whatever is your comfort range. As you're coming into that, well, there's no question about where the exit is, right? It's right in your face, right? This pivot right here, oh shit, come here. This pivot right here is your exit, right? We go beyond that, then the premise here is invalidated. But as long as we stay below that pivot here, I've got lots of opportunity. Even though I've got a little upswing going on here, my trend is clearly down. So I don't want to be pushing for counter trend plays necessarily, right? Again, assuming you're trying to keep this relatively simple, this would be getting a little more aggressive here. Let's stay with trend. Trend is clearly down. We could look at higher time frames here. That would be very obvious. So as long as I stay here, now look what happens. So as the market moves, we get out of it and then we come back into it, into this pocket of liquidity. Then we go down again. Now we come back again. Now we're into this pocket of liquidity. Now we go down again. Now we're coming back here. Now no, we don't get into this pocket of liquidity, but one of the nice features of this indicator here is that I've got fair value gaps here, imbalances, right? That are candidates for an additional entry template, right? So if I've gone, we'll note here, I'm right to the 21 EMA, which tends to be a magnet for price. Once we get too far away from it, you'll find that it'll come back, and that'll be a retracement point that's very common. You can see it again and again. And once we get on the other side of it, same kind of thing will be happening. So I'm coming back here. Now I can look at that and say, oh, it didn't get into the box. Okay, I missed the trade. Fair enough, right? Same thing happens here. I get a new push here, but you can see there's a potential, just that at this moment in time. Could I be here at 1:20 in the afternoon, rolling over into an upside? It's very common for the market, if it gets this far from VWAP, right, towards the end of the day, to want to be pushing back towards VWAP to close the day. Now, the trend's too strong. It may not happen, but that's a bias to keep in mind. The market may want to start pushing back towards VWAP as we get towards the end of the RTH session here, for all of the indexes. Now, has it started yet? Well, there's a few things here that are worth noting. So if I were to take this pivot right here, well, you can see we've broken that and we got to close above. So all that's happening here now, we're coming back here. This is very common in market structure. We're coming back to this pocket of liquidity here that's on the bull side. So I'm coming back to this little pocket here, and look what I do. I come right down, right to the 50%. Oh, pardon me. Yes, that is the 50%. Right to the 50% of this, where there's a fair value gap, and then I get a little pop. Now, again, as I was saying, let's see if I can get that out of there. What's your target? Your first target still has to be the top of the box, because again, hindsight, it always looks easy. We don't know where that's going. So once I'm a buyer here, well, let me do it this way. Once I'm a buyer here, my first target is that high. Well, there's 59 ticks to this high. Now, you want to let it run, let your runners go. But recognize what's right above you. Well, now I got sell side liquidity here. Potential, right? And who wins that battle, right? So the sell side takes it, right? Well, as you see, right here, we come into the pocket of liquidity here, and the sell side takes it. So now, how can I add a component here? Because we can see that it's not always going to get into the pocket of liquidity, right? And a very strong trend we see here. It'll often be right at the edge, or right at the edge here. You know, the fair value gaps will often play a role here. You see this fair value gap is not fully mitigated. If I pull this over, you can see it's still affecting the market, right? We still haven't broken the other side of it. So you could make a case that it's fully mitigated here, but we still haven't broken above it. So that's why it's still on the chart per this indicator. So I'm back into it. Now, again, you can start to combine some concepts here. We can look here. We can say, well, what happened right there? We know that's a fractal, right? So this is liquidity sweep. Certainly could be, right? It wouldn't be an unreasonable conclusion as we sit here. But now you got to wait for it, right? If it's coming back, if it's heading down here, this is not the leg you're looking for. It's knowing that that's coming is there is no knowing. It's after the fact. When we come back to it, that's the trade here. Not here, not trying to anticipate that. It's that we're coming back to this where I've got a pool of liquidity. So that would be an area to consider a sell. Consider, right? So there would have to be a little bit more there for me, because note, I'm on the other side of the 21 EMA, which is suggesting, oh, perhaps we're going to push a little higher. Again, there's no knowing. After the fact always looks easy. But as we sit here right now, this is a sell area. I've come back into a buy. So you see how we're rotating? So for those of you that don't mind trade or prefer to be trading virtually every swing that you see, which would be a different discussion as to whether or not that's the right way to approach it. What we want to look for is a little bit of confluence, right? So we have this kind of guiding the liquidity pockets. Well, something that, and this probably will not surprise you, that I would encourage you to consider augmenting this decision-making process is the measured move. Right, because we know, if you've watched enough of our content, you know that you could make a very strong case that is the most dominant algo that we as retail traders can identify. So let me square this for you and put this on here from the open through the close. Now, I've already got it on the indicator. All I'm going to do is add the measured moves. Now, look how these start to augment any of that decision-making process here. Now here, I mean, these are just dramatic, right? I mean, this is, when you see this, I don't want to say there are no guaranteed trades, but these are, we call these ZZ top hats, right? When you get a stack of Goldens like that, certainly not an area you'd want to be buying into, right? It's just way too much algorithmic activity there. We go just point aside, right? I mean, these are dramatic, and look, we bounce into them. Now you start to look at some of this integration. Now remember, with this indicator here, the measured move is showing you after the fact, right? The auto fibs are showing you in real time, right? So that's the difference between the two. So in actual application, you might be using the auto fibs to identify these locations, because the market has to move away from these far enough for this to register, because you can't show it in real time via the measured move, because you don't know if it's going to play or not, right? Because for every one that's there on the short side, there's one on the long side. So there has to be a slight delay before it prints on the chart, because it has to confirm. So as we're doing it, well, here you can see it would have been right here, right? You would have had another one right here, right? Maybe a little front run on the 50. You had another one right here. But the way we have this set, right? So it has to be. Well, let's get that out of there. It's going to confuse you. It has to move away for a little bit. So now let's go back and review. Now here's one. Now remember, this is not the sell. You're not looking for that necessarily. What you're looking for is when we return to this area. We return to it. So if I take that box and I draw it over like this, when I return to it here, now yes, granted, there's a little upswing here. That's not uncommon that we get higher high, higher low, higher high, higher low, right? This is a 1 minute chart, so we get a little micro upswing here, but we get back into the box. Now what I want you to focus on is in the box, I've got the measured move right here. Now, much as we love the golden, right? It's not always going to be golden, right? Often it'll be the 50. So we're coming right into the 50 here. I'm inside this pocket here. You might look at that and say, well, I'm not sure, right? I'm on the other side of the 21 EMA. Once we get under the EMA, certainly a potential. Now, it's a very, very short swing here. Look at the time of day. We're just coming into the noon hour here. Here's the trade. If you didn't take it here for whatever reason, because of this or the EMA, as we swing down and then we come back, look where we are. We're right in this pocket of liquidity. Then down we go. Right now we're coming back. Right, I get just barely into this pocket of liquidity. Look what's there. Waiting for me is the measured move algo, right? I come down to the low end, I pop back 21. There's the golden zone. Here are all my targets, right? So this target is for here, this target is for here, this target is for here, right? All of these targets being hit. Now we're coming back again. Look where I am. Now look at the confluence here. I don't get into the pool of liquidity here, but no, what's there? I got the 21 EMA, I got a 50, I got a fair value gap. Right? Your target would be the low. So is there enough juice there to make the risk worthwhile? Well, what's your target there? That's 132 ticks. Now on micros, okay, $66. Okay, nobody's getting rich off of that. But you know, what's your size? And how many times are you going to trade during the day? Right? Again, you don't have to trade off of a 1 minute. Trade off of a 5 minute. It would be the same idea. But because so many people, we have so many prop traders, right? So this really. Is anybody not trading prop anymore? It's hard to believe, but I would guess 95% of futures traders are not trading with prop money, right? Because they look at it and say, well, you know, why am I risking my own money? Not sure if you're having better results or not as a result of that, but that's just the reality. So for those of you that are looking for these high probability locations, this is an objective way to approach the market. I've got a pool of liquidity here. If I come back into it and I can combine that, well, here for example, let me take the measured moves off and let's go to the auto fibs. Right, this is real time. So when this comes back here to this fair value gap that we drew here, you're right at a golden zone here. Now you might look at that and say, I wasn't. It's above the right. There's lots of ways to talk yourself out of the trade. This is not necessarily the trade. This is the trade. When we come back into this pool of liquidity, like where I am, 50 golden zone of this box. First target still has to be the low of the box. Right now, enough there? Well, again, same process, right? It's a handy little tool in our toolbar here. Is there enough there? Well, there's 74 ticks. Again, what kind of size are you trading? Does it play? Now, there's an example here. This is real time, right? So the measured move indicator may not be there because this is real time. Measured move is always after the fact. But I can see if I pop up again, here's where the next golden zone is. Here's the next 50. But the idea of all of this, Let me take these off. The idea of all of this is to reduce the emotional decision making, to give you a mechanical way to approach entry based on pools of liquidity. That's what this indicator is trying to do. And it does it. Now, is it going to be 100%? Well, of course not, right? Nothing. There is no 100%. There is no guaranteed winner. There's just probabilities. But at least this is based off of an understanding of how the algorithms are move and what they're looking for, pools of liquidity. And oftentimes they create the pools of liquidity. So it's the kind of thing you might do a little trialing on this. As we're going to do here for the next week here, I'm going to do a series of kind of revisits to some of these indicators here that again, series of questions. How do I best use this damn thing? That's kind of what we're trying to do with this series here. So we're going to give you some incentives here. I'll do the same thing as I did yesterday in the market structure. We'll offer you a 20% discount on this, good for the next 48 hours. Consider them little micro flash sales. For those of you that look at this and go, God, that would really be helpful to me. That would really help me. Again, it's, could you draw them yourself? Yeah, you could. Is this an event? What it is, it's efficiency, right? And it's taking the subjectivity of like, oh shit, where do I draw? Okay, would that be one? Is that one? Right? It's doing it for you. It's doing it for you. And then adding in the fair value gap and the imbalance. Now, if you want to take it to the next level, as I've just demonstrated, I would encourage you to consider adding in the auto fibs or the measured move, right? The measured move, if nothing else, what the measured move does is show you how dominant this algo is, right? It's like you're like, oh my God, you got to be kidding me. It's like you're looking at an X-ray of the market. This is what happened throughout the course of the day. Now, where's the next measured move, right? Now, that's where you have to go to the auto fibs, right? So here it is, right here in real time, per the swing range that we have. So now, I would say this: if I had to pick one or the other, measured move or auto fibs, I just choose auto fibs because I understand how dominant this algo is, right? This is often a place where people go, "Holy shit, I had no idea." But once you've seen it, right? Okay, well then I know to look for it. That's why the auto fibs is so valuable in real time. I can look down here. I've got other targets down here, but at this degree here, I've got no buy side down below. I've only got sell side up above here, as this downtrend continues. Note, right? There are no 50s or golden zones down here. So there's no reason at this moment in time to be anticipating some sort of big swing structure here until we get we would need some sort of a big move here where we might have something come back in this range. Then I might see some buy side here. But right now, this is all sell side. And you can always tell by which side of is the 50 on. Right? So these are all sell side, right? So if I bring them back, no question about what they are. Now add the two together. I think you'll like the results, right? So again, we'll run a little promo here for this. We'll take 20% off. I'll do this. I'll take 20% off all three of these. The dynamic reversal zones with the SBS built in it. That would be another video. The measured moves and the auto fibs. All three of those will have a 20% off discount for the next 48 hours. Okay.